Hello everyone, welcome back to my channel. So today there are a few things which I wanted to talk about, right? So if you have seen my videos, past two videos, right, where in detail, and first of all, thank you for watching those videos and really appreciate that. So if you have still not subscribed, please subscribe and follow my channel, because I'm just trying to give a thought process and to a wider audience through my channel, because these things are need of the hour, right? So today what I've done is that again I have written one article on how we can rethink growth and why stability, which we are coming from our previous videos, right, requires fairer finance in today's era. So here want to talk about the economic principles, right? So just to give you background, I am basically an engineering grad and an MBA, right? So I have a fair understanding of how the economics really works. But still, this is my aspects, reading different books and coming from my perspective also, and seeing the world, right? So what I did was I wrote this particular article, right? And the premise of this was like, economic growth remains the key of success, right? So if you see, I'll just bring it down, right? So what I'm trying to do is that I'm just trying to make sure that whatever I have written, it makes a little bit sense and people actually start discussing and do a brainstorming. My prerogative is not to just give those things, but actually can we start a conversation, right? And here is the thought process. So now economic growth remains the key for any government, right? We know that governments and policymakers, the economic principle is key. So again, I'll just pause here, and I know for the larger audience, this becomes a little bit more theory part, but just be with me and try to understand what I'm trying to give my thoughts, and then we can discuss and put your things in the comment. And if you're not subscribed, please subscribe, do subscribe, right? So yeah, so as I was mentioning, the economic growth remains key for any government or policy makers, because indirectly or directly it affects the masses. But yet we see that growth alone has not brought any stability, right? We have been talking about the stability part. If you've not seen my video, please go and see. So growth has not happened. And why? And the rising inequalities is happening. Persistent household debts. If you see the statistics, the debt for household is increasing, right? And subsequent financial shocks. You can see 2008, another shock, and now the world also does not look very good, right? Economic principle is really in, if you see economists. So now it shows that expansion without fairness now creates fragility, means it is broken, right? And there is no longer only and I'm not just speaking this from this moral or social context, but it is a governance concept and framework problem, right? And if you just think, how does it, for the people, for the real economy, not the one which is, I don't feel it's a thing, but for the real economy, wealth needs circulation. If you start keeping it, then people will not get the benefits of those things, right? So wealth needs circulation. Therefore, when wealth is accumulated, right, and without mandatory circulation, capital concentrates. Think about this, right? I keep hoarding it. I'm not putting my wealth in the economy. So I'm not going to produce anything. So the capital gets started concentrating. And then because of that, speculative bubbles and asset inflation follows, right? So the inflation happens. And opportunities get narrowed. So over the time, public trust erodes because the system is not working and working for few. And you can see now in politics also, right? Everyone talking about system is not working and those things. So over the time, public trust erodes in the system. And the legitimacy of the political policy or the global policy itself weakens, right? So redistribution and stabilizing mechanics. So I'm just reading because I've written an article, right? Are not, so the redistribution and its mechanics are not anti-growth, but rather they protect from economic fragility. So we have to understand these things. So we have to change our minds. I know this is a little bit an abstract thing, but just be with me to understand. And one of the most consequential design choices in the modern finance is the prominence of the interest factor. We all know, you take home loan, you take any loan, you have to pay the interest through your nose, right? So this interest, so what I'm talking about is the interest-based debt is a consequential aspect of modern finance. So with this, the credit fuels true growth, but in a way, credit is structured that it cannot either absorb or amplify them, right? So, interest, as commonly practiced, externalize risk. Now, what I'm trying to tell is that it externalizes risk. Lenders lock in the fixed return while the borrower shoulders everything, right? The unpredictability of the market. So, this symmetry continues, works for some time, but it does not go for long. And that's why you see over the period of 100 years, the economy keeps coming shocks. And when a shock hits due to various reasons, as I said, the borrower gets a shock about downs, disruptions, policies, calamities. You cannot control these things, right? Now, fixed repayments become a deadly machine. So because it's a fixed repayment, it becomes a deadly machine that extracts value at the moment the economy can least afford it, right? So this is my whole theme about talking about why interest-based economy is really a pain point and not sustainable in long term, right? So to give you a picture, let's imagine there's a small manufacturer that borrows to expand capacity. Now he takes some money, he expands capacity, right? Now banks would charge fixed interest and repayment schedules. For months the plan works because you are getting money credit. Imagine then there's a sudden fall in the demand or an input price spikes or it halves revenue. Because input price spikes, it halves the revenue, right? Now you might ask how, right? The question is, you might ask how. Now this is part of the global disruptions, value chain. Disruptions can happen because global value chain, global issues, other factors beyond one's control of the manufacturing example which we take, right? But all these, still the repayment schedule does not pause, right? And I'll come there because I understand where you're coming from. Okay, bank is giving money, right? But let me just build the context. So the firm must either take the risky credit, go to some Mahajan, sell their productive assets at a loss, lay off the people, staffs, or default. Right? This happens with the firm. Now, bank enforces the claims, the entrepreneurs loses, the workers suffer. Therefore, society bears the consequences of this, such as unemployment, lower demand, and the social strain. So you get this picture? Yeah. So the dynamic is not hypothetical, which I'm talking about. It is the structural reason interest treats money as a commodity, right? So interest by itself, it treats money as a commodity that must appreciate regardless of the underlying enterprise performance. Okay. So now it's a common issue that enterprise should work. So the people who are taking a business or doing any loan should work harder, innovate, and manage right, and manage their obligations, right? I mean, one can ask that he's taking the risk, he has to manage it, he has to work hard, he has to sell those things. But the point is valid for the effort. Effort matters, right? But it's a common retort that assumes that failure is the sole reason for the entrepreneurs, right? It is commonly taken that failure has happened because the entrepreneurs or the business guys or whoever was incompetent. But in reality, if you see, it ignores the shock of the systems. What are the shocks? Downs. Can the enterprise owners predict downs? Pandemics, COVID happened. Policy changes of the government, value chain disruptions, commodity and other things that seriously wipe out demand or put the costs regardless of management skill. So are you getting the picture, right? So this is the whole concept. So failure is often treated as individual moral failure rather than the reality of the context. And then the systems punish the resilience, right? So forcing fixed payments during a downturn is not discipline, in my view. And that's what I've written in my article. That's I'm looking here. And through my videos, because as I said, the newspapers don't publish the article unless it has coming from some big person, right? So videos is what I'm trying to focus my point in, that forcing fixed payment during downturn is not discipline. It's a structural punishment. And any fair system would ask who absorbed the risk when the upswing happened, right? When everything is going good, upswing is happening, who absorbed the risk? Who bears the loss when the downturn arrives? When the upswing happens, everyone earns. The bank is earning, everyone is earning, the people who are invested earnings. So when loss happens, who bears the loss during downturn? So now what's the solution? So here I'm taking it. So what's the solution of the framework? Risk sharing is an alternative that preserves incentives. It removes the capital concentration. It does not let crony capitalism work, right? And we all as a society have to think about it. And this is the sustainable model which will happen, right? So I'm not going to take this video because if I talk about a lot of principles, the video will explode, right? And people will get bored. But I'm just trying to put the themes in your minds, that in your forums, in your discussions, in your thought process, and it reaches government and global scale. Let them think about this. Here are the few solutions. We have to promote and pilot profit sharing, a profit loss financing, right? Like more of venture capitalism way, encouraging the risk sharing vehicles, strengthening bankruptcy and debt relief frameworks, regulating the predatory type of credit and excess leverage, right? And institutionalize automatic stabilizers and rapid welfare distributions, right? There are some of things which I've highlighted. I don't want to get into nitty to those things, but we have to support the financial literacy and capacity building more than that, and also exploring legal and fiscal tools for accumulation, right? So just to conclude my video, what I'm trying to put so this is the way forward of what I'm trying to, no matter how much the argument is there, that then what is the money, how things will happen, right? So, but deep down for governments, the argument is simple. The policies that tolerate the system, which concentrate risk and protect guaranteed returns for the capital, show social fragility, right? Because you would ask that it's my money, I'm investing, so I should get this. Fair enough, but I'm taking the initial risk only. What about the risk during the lower part of the cycle, right? So when ordinary common people repeatedly bear the downside of a system shock, as I mentioned, different shocks, pandemic, policies, does not have any of those things, right? While the architecture of the finance preserves upside, this is what I'm talking about, which I've written, that when the ordinary common people repeatedly bear the downside of the system shocks, while the architecture of the financial system is such that the finance preserves the upside in the capital, slowly the trust will erode and it will break down. And that's why you're seeing it. We have evidence of World War I, II, and then we have the global change, then US taking off the gold standards, then 2008, this subprime, all those things. And now you can see the gold and silver price is rising very high, right? So we all have to think about this, right? Policymakers are ignoring these mechanics, and common people, economists, I mean, you can say I'm not the economist, but we have to think in a going deep, right? This interest-based system is global. So we have to think what could be the next thing. So policymakers, or they're ignoring, or economists, because they think the credit will fuel the growth. But it for some time, they're evading these mechanics eventually. And history has already shown us, and directly face to political and the social instability, that no GDP number can hide this, right? So now, just to conclude so if you have not subscribed, please subscribe. So just to conclude, transitioning towards risk sharing does not require ideological zealotry. Means what I'm saying is that when we are moving from interest-based system to risk-sharing system, it requires practical reforms, demonstration projects, right, regulatory sandboxes, and targeted incentives, consumer protection, and stronger welfare systems, right? So these things are the basis of how we can run the system. Now these are governance tools that preserve the market and build resilience, right? So I would conclude by saying this now: achieving growth without fairness is brittle, and history has shown us, guys. And we have to think, if policymakers, like leaders and economists and all those people, right, the top layer would definitely want to preserve this because they want the capital at their hands. The lower class, the middle class will all. That's why you see that the houses does not come down, even though there's no demand. The flat prices or the apartment prices keep still there, right? So this is not just the problem of the government; it's the common masses problem. So we have to do this deliberation of the policy. If people want real growth, which endures, then they must design systems where wealth is understood as responsibility and not just as a private entitlement, because then it will be a win-win for society and human race. So with this, I want to conclude that we have to move away from this interest-based system to a system of risk sharing. Within that, there are a lot of things which have to come into picture, right? How that will happen, how banks will operate, how it will happen, what are the ways, all these things will have to be dealt into picture, and that's why economists and other people have to come. But I want to explore this idea into your minds and make this video reach as many people as we can, so that the discussions happen at the forums. And when this happens, then we'll see a lot of things happening in terms of the real value gain, a win-win situation for we as human people. If you like this video, please do not hesitate to share, subscribe, and like it, and share to as many people. Thank you very much, and I will meet you in the next video. Have a great day. Bye-bye.